So, good evening, guys. Um, Thank you for coming to watch this video, though it's for our benefits. You understand? And what I'm our benefit in such a sense that when you watch it and you're being profitable from it, when they ask you whether you get any strategy, you mention our names. So that was too much of our time today. I will try my possible best to explain this and so that you guys can actually get every bit of it. So, but as I'm doing it, please flow with me. So before anything, kindly please subscribe to this YouTube channel and like this video and other videos we've done. You understand? This will actually, let me say, encourage us to drop more content. You understand? And besides, we're actually going to be starting the advanced class soon. You understand? So when we drop some little tips about the advanced, you understand? So you can be the first person to get the notification popped up on your devices. So now, without wasting much of our time, as you can see, the title of the this is actually a boom and crash strategy. That doesn't mean it doesn't work for other volatilities. It works, you understand? But because I've actually gotten some questions, how do you trade boom and crash? I can see you're using SMC. How are you doing it? Fine. The only thing you can actually do to work with boom and crash is you just using what I call this so basic. So many things actually applicable to SMC, but the thing you actually have to use is your order block and sometimes fair value gap. You understand? So now, and what will lead us to, because this is boom and crash actually, so it will lead us to what an I said called external order block and internal order block. You understand? So let me first explain what we mean by an order block. So without wasting much of our time on an order block, I will actually explain it like a layman, using a layman language so that you guys can actually get this. Nothing is meant to be hard. An order block is the last candlestick that occur before an opposition movement. Now, it sounds a little bit hard, right? Okay, fine. Let me explain. Now, I said an order block is a candlestick that occur before the opposite expansion of the next candlestick. Now, if you actually notice this candlestick, you see that it has a very powerful selling pressure. Yes or yes, yes. So definitely the last candlestick of it will be what have to be the bullish candlestick. So definitely that's the bluish order block, because the order blocks are actually of two types. You have the bluish and the bearish order block. You understand that if it's actually a green candlestick, is a bluish order block, and if it's a bearish candlestick, is a what? Is a bearish order block. You understand? So basically, so sorry for the interruption. So you understand? So if this is actually a bullish order block, so definitely this is actually an expansion to this is a what? This is a bearish order block. This is an expansion, a powerful expansion. So this is what? This is a bluish order block. This candlestick is a bluish order block. So we are now already good spotting our order blocks. So now looking at here too, this is an order block because there was a movement here. So now this another thing that will lead us to these things are okay. Before that, let me now talk about the external order blocks and the internal order blocks. When you want to deal with your external and internal order blocks, you understand, I will explain this thing in such a way that you guys will actually just understand. Like I said, now what you just have to do is more or less like you take your eye, that is where your resistance, where your resistance is, your zone. Then you take your low where the other zone is. You understand? So now, if you spot an order block very close, you understand, very very close let me say if you spot a tradable order block, because we have tradable order blocks and non-tradable order blocks. If you spot your tradable order blocks around that zone or inside that particular zone, you understand, then you mark it the first zone. You understand? You mark it as what? You mark it as your external order block. What do I call it? External order block. You understand? So when you actually want to work with this order block, you just have to take the high and the low of the order block. You don't really need the real body, just the high and the low of the order block. That's what you actually use. You need. You understand? Now, as I was saying, so now basically now this is our what? External order block. You understand? Now, but normally they call this thing external liquidity too. You understand? So since this is your high, this is your low. Let's look for another order block around here. So let's call this another order block here. The last order block. You understand? So this is the last order block. This is the first order block now. So now, these are our external liquidity. So any other blocks that exist from this high to this low from here is called internal order blocks. That is the order blocks that actually occur within the range of the high to the low. You understand? So now, what's the difference between these external order blocks and internal order blocks? Now, fine. The thing is that external order blocks tends to change or tends to happen to be a reversal. That is when the price of the market is this other external order block, there tends to be a change in direction, not retracement. There will be a change in direction. That is the price of the market wants to come down to change the direction. But what is these internal order blocks? These internal order blocks, when they actually occur, for instance, this is an internal order block. Okay, this is an order block that actually exists in between the high and the low. So now let's draw it out. This internal order block tends to serve as a how will I use it, as an opportunity for the markets to make a retracement. Do you know we have two type of movement? We have the impulsive movement and the retracement movement. And what do I mean by these two? Since this market is actually in a downtrend, I mean from year to year. So any kind of movement moving in a downward movement is what is called the impulsive movement, and the one that wants to move against it is called what? The retracement movement. And normally, do you know the validation of an uptrend and downtrend is what? Higher high, higher low. That is the price of the market will be moving like this. Understand? These are the validation of uptrend and downtrend. For instance, now since this is actually going up, this is validation for uptrend. So this will be the higher low, higher high, higher low, higher high, higher low, higher high, and that's how the market are supposed to be moving. You understand? So what this other block does is actually creates an opportunity to create an higher high and an higher low. For instance, when you see that when the price of the market is many other blocks here, when if you switch to lower time frame, you sight them very well. But I'm just using this one because it's actually visible here. So if you actually want, okay, before I get to that particular place now, let me still continue here. So you understand what I'm trying to say? So after even this class, I'm actually going to drop this signal in the group. You understand? So now the thing now is, if you notice that when the price of the market entered the zone of these other blocks, there was a retracement that it chose the opportunity to create what? An higher high and an higher low for the violation of the uptrend. But now the price of the market has actually got into this external liquidity. So we tend to think that probably there will be a change in price in direction. You understand what I'm trying to say, guys? And now if you're actually going to place your sell from here, you actually want to put your TP here because this is another order block. This other block can actually now serve, you understand, as maybe an opportunity for you to create an higher high, higher low, or change of character. That's another topic for another day. Change of character. Don't let us get things mixed up. You understand? So now let's go deep. That is, let's go to the lower time frame to see when to enter and how to enter. But with this little explanation, I actually thank you guys, and I hope you guys actually understand it. So now let's go back to picking of entry. Since we know from this particular range to this particular range, there should be a change in direction of the market. So now let's go to, without wasting much of our time, let's go to 30 minutes. So any opportunity you want to see is what? A selling opportunity. So now, without wasting much of our time, this is the range of the order block here. And coming down very well, we can see this kind of movement, which is RBR, that is rally based rally. You understand? So definitely these are not, don't worry, that rally, I think you may actually confuse some of it that you're not actually still okay with ICT concept or smart money concept. But this is actually this is actually another block too. You see, actually, one thing when you actually switch to a lower time frame is you begin to see things beyond the higher time frame. But what the higher time frame does is that it makes you to understand your actions. It makes you to pick the action you want to make. You understand? So, but one thing about the lowest time frame is that you'll be able to see the little things. You understand? Which are very sensitive. Now we already have the visible order block. Normally, the price of the order block should be from this range to this range. But looking at the lower time frame, you can see that the order block actually exists here. You understand? It's being precise. It's being accurate. You understand? But from the higher time frame, it may actually be precise. But in the lower time frame, it will be a little bit accurate. You understand? So now, what are the other confirmations we can actually use to enter this particular boom 500 trade? Now, that's where our chart patterns and reversal candlesticks comes in, guys. I hope you can see I'm actually eating all this. And the basic thing why do you think there tends to want to be a little bit of spike here is because this is actually an internal order block. Can you see? And now there's actually another block here, and the price of the market wants to use the other block to create what, an higher high. But when it gets to this place, this is actually about the internal chart pattern. I'm just trying to explain. Normally, you don't have to understand that once that breaks below this trend line, then we sell. And possibility, if it tends to create another block again, then we tend to know that it's actually coming for a retracement to the particular other block left around that place. You understand? And I wonder some of you guys should actually be asking the question that there are sometimes the price of the market does not even really taste like that. It's just when it breaks, it just go boom. That's because of the absence of an order block. You understand? When there's an absence of an order block, when those chart patterns, the price of the market doesn't normally come to retest the stuff it broke. Though it's rare, but it happens. So we have this bit getting, let's just say, rising broadening word. So we can just wait for this 30 minutes candlesticks to finish. So if the price should go beyond this order block here, because it's actually tradable, it's actually resting on a trend line. If it goes beyond this break is very slow, we can actually enter and take our TP around here, guys. So now, what are the tradable order blocks and not tradable order blocks? Now, first, the tradable order blocks are the order blocks that actually occur. So let me say the order blocks that occur inside the zone, inside your zone. If the price of the market is coming back to a zone, if it doesn't hit that order block, that means it's not ready yet to leave that zone. No matter how it tends to try to think it wants to move, it's trying to shake people off the market. That's why they say patience is the key in this trading. Do you understand, guys? So if the price of the market doesn't actually hit that other block in the zone before moving, you understand? For instance, let's just try and look. Let's try and look. Let's try and look. Trying so hard to get one. Can't really see, but when the price of the market hasn't actually touched that zone and the price of the market wants to maybe go in the opposite direction, know that it's not ready yet to move. That's why most people get liquidated out by a spike or something. You understand? Just keep calm. It will surely get to that other block. And when you actually want to trade, it's most advisable when to just trade using external order blocks. You understand? Because sometimes these internal order blocks are not good to trade. So example of order blocks that are not tradable are the internal order blocks. You understand? Though if you actually want to trade them, you can just use them for this higher to enter rallies or to enter the discounted price or to add a position at a discounted price. You understand? And once there's a break in the higher low or lower low or lower high, know that the validation wants to change from maybe an uptrend to downtrend, from a downtrend to uptrend. That's change of character, and that's for another day. We'll talk about that for another day. Probably that'll be the next video. We'll be actually talking about CHOCH, change of character. You understand? So these are actually use this order block concept to it works for both spike and ticks. Because when it gets here, it has to be a spike. So I'm hitting the ticks, I'm hitting the spike. But when it's break here, there will have to be a lot of ticks. I'm hitting the what? I'm hitting the ticks. Do you understand, guys? So it's just as simple as that. So that's why when I actually see people coming to my DM, I'll be like, what you're actually trading is actually risky. Like, it's because this concept is more or less like trading like the trading like the banks. You understand that concept, ba? So that's that about that. So since now we're actually seeing a reversal candlesticks around this particular order block and around this trend line, you might just tend to think that okay, the price of the market still doesn't want to move, probably wants to retest using this internal OBA. You understand? But if it breaks below here, we're actually going to enter. You understand? So that's what we have in hand now. Definitely, if it actually breaks below here, there'll still be another block left, entire other blocks left around this place. You understand? So the price of the market might tend to want to use this other block here. Other block here, this one. Yeah. If it breaks below before, like, no, it didn't go like this. Even though if it goes like this, if it goes like this, you understand? That means the price of the market will just come like this. So we test this other block here before going like this. But if the price of the market should break directly like this, that means the price of the market will go like this. It has to touch that other block. I told you, the last other block, very close to it before going like this. When it now gets here, anyhow, or just come like this. Do you understand what I'm trying to say now? Let me change the colors to different colors so it will get you guys. So can you see? So that's that about that. So we talked about tradable, and one of the another example of tradable order blocks are other blocks that actually is actually left with fair value gaps. You understand? So that fair value gap is always created when there's a powerful movement. You understand? These are 3 candlesticks. That is when you count it's actually, no, I don't want to complicate things to you, but when there's actually a powerful movement, and which leaves another block, that is the eyes of the candlesticks and those of the candlestick as before the other block, after the other block are not really touching themselves. Let me just use that concept. Don't let me divert too much inside the fair value gap, so you guys won't actually get things mixed up. So that's an example of a tradable order block. So thank you very much, guys. See you next class. And now, if you actually have had a little tip of the strategy that works. Now imagine if you actually now opt-in or pay for the mentorship program that probably will actually bring up tomorrow. Just use the promo tomorrow. Use the promo tomorrow. Okay, guys. Thank you. God bless you. If you have any question, you can actually just ask the question in the comment section in the YouTube video. I'll reply. Thank you very much.